The rebalancing teleserye has finally ended. It's like finishing the finale episode of your favorite Netflix series. So what's next? Let's discuss. My name is Denslim, and welcome to another episode of Monday Market Outlook. Finally, the index rebalancing announcement came out last Friday with no surprises, plus in and bloom out as expected, which brings this rebalancing teleserye to a close. Meanwhile, Keeper and Pure Gold will be added to the dividend yield index. While it's not all a loss for Bloom, as it will still have a consolation prize of being added to the mid-cap along with AUB and OGP. I guess Mr. Monson got his go signal from the President's podcast last August 4, where he expressed his reasons for not mentioning the issue on online gambling in his State of the Nation address last July 28, where he said that the problem is not online gambling. The problems are the social effects on our children and those who are addicted to gambling. So I guess this has sealed the deal for Plus's index inclusion, which will take effect on August 18. So as the President has instructed to convene a conference of all stakeholders, the circus is back in town. Late last Thursday, the schedule for the committee hearings for this week was published on the Senate website. On August 14, the Committee on Games and Amusement, joint with banks, financial institutions and currencies, youth, economic affairs, and ways and means will convene to discuss, I presume, how to regulate online gambling. Hopefully, they can do a crackdown on illegal sites, which will actually benefit the likes of Plus. Now, moving on to the major economic announcements last week, inflation in the Philippines fell to a 6-year low in July, surprising economists with a sharper than expected drop. So the significant decline strengthens the case for further rate cuts by the BSP. The soft inflation outlook increases the likelihood of continued monetary easing despite a possible pause in the upcoming August policy meeting. The Philippine unemployment rate dropped to 3.7%, lower than the 3.9% in May, but still higher than 3.1% a year earlier. This translates to 1.95 million jobless Filipinos, which is down from 2.03 million in April, though still above the 1.62 million from the previous year. And despite the decline in unemployment, experts warn that job quality and sustainability remains the key concerns in the labor market. Lastly, GDP numbers came in at 5.5% for the second quarter, a slight improvement from last quarter's 5.4%. This growth was lower than the 6.5% recorded in the same period of last year, and the slowdown reflects a broader deceleration in economic momentum compared to 2024, brought about by global tariff uncertainties. GDP was supported by easing inflation that boosted consumer spending despite the reduction in government expenditure, though the decline in government spending from 18% to just 8.7% was better than expected considering the election restrictions. Now, on the regional front, the 5.5 reading is currently the third best reading in the Asian region among countries that have already reported GDP numbers. We are tied with Cambodia at 5.5%, with Taiwan and Vietnam in the driver's seat, tied at 7.96%. The MSCI August Index Review, unlike the PSE, was released well in advance last week. This will take effect even later than the PSE rebalancing on August 26. No changes in the standard index, but the small cap index will add RCR and PNB to the detriment of DNL. So the Philippines will see a net inflow of $38 million, where some of the major index movers, especially Meralco, would see a 1.4 multiplier in its daily average volume. Let's see if the inflow of funds could help the markets in the next couple of weeks. Now, as the second quarter earnings continue, let's look at the current index stock performance. Most are in line with expectations, with 5 names underperforming. Overall, not a pretty earnings season so far, especially for index names. The weighted average growth rate for the second quarter is at 5.6%, a significant decline from the 6.9% the previous quarter. So this may bring in some negative sentiment for the index in the near term, especially with the index bumping its head on the trend line resistance last Thursday, pulling back on Friday to close at 6339, but up around 0.4% for this week. So at this point, near-term weakness may happen as early as this week. The index worst case scenario would drop back to 6,200, but hopefully we can try for a double bottom before we enter the ghost month. Or, best case scenario, 6,300 support holds. Now, the rebalancing will happen somewhere around here next Monday. So after this, will traders take profits for DigiPlus, or are most traders now more confident about the stability of Plus and would not cause the index to go up, down, and all around? Meanwhile, the Philippine markets may have been helped by the dollar weakness, with the peso sharply strengthening to 56.79 to close the week. So let's run through some of the sectors for the PSE. The conglomerates doing quite well, especially for AC, GT Cap, JGS, LTG, but SM breaking down the 800 level here to 795. The next support would be here at around 770 or 765. Let's see what happens for SM. Property stocks continuing to rally. Ayala Land, RLC, MEG, FLI, all doing quite well again, except for SMPH. Maybe the ghost month is only targeting Chinese companies. Now, REITs continue to dominate. RCR has been the speculative alternate to index inclusion. One day RCR is in, another day RCR is rumored to be out, in, out, and finally we got the answer. RCR is in, but not in the PSE, but with another index. So congratulations to RCR holders. Now, if you guys are looking to enter REITs, of course, the next best REIT is Phil REIT. Now, dividends declared ex-date, August 19, 6 cents per share for a nice 7.11 dividend yield. Now, the banks, big 3 banks, still struggling, but the second liners, Security Bank, East West Bank, and PNB dominating the sector. PNB pullback to the 20-day EMA was a good entry. Dividends declared for PNB, 1 peso 38 cents, ex-date September 12, for a nice 4.2 dividend yield. Congratulations to PNB holders. Now, gold consolidating along this area. See the long consolidation here. This consolidation, the recent run-up, benefits Apex, double dip here, breakout here of what could even be a triple bottom. The next area of resistance would be here at around 7 pesos, but not so good for Philex Mining because of the sharp drop in copper prices. OGP, the winner of the sector, declared dividends ex-date August 20, 62, almost 63 cents per share. So on the gambling sector, Bloom breaking down of the VWAP level, expect more weakness, probably up to 350 or even here at around 320 or 315, especially after the rebalancing announcement. DigiPlus could gap up this week. Again, the major resistance levels 33, 35, but look at this level here. If we break out of 40, 41, look at the gap here. There's nothing here stopping plus from even hitting 52.25. So maybe another exciting week for plus traders. We'll see what happens. So on the consumer front, Monday, look at what happened to Monday. Is this an overreaction to its earnings? Disappointing earnings, right? Because while the meat alternative business improved, core business took a hit. I'm looking at 7 pesos here. Let's see what happens. Last week, I added Keeper, waited for the dip to the 200-day EMA, then a bounce. A good entry here. Check if it can manage to break through these key resistances. But there may be a gap fill here at 259 before a possible breakout, especially after their positive earnings. So we'll see what happens there. On the utilities front, Meralco still consolidating within this price range. Let's see if the MSCI rebalancing can help Meralco break out. Next targets would be 580 and 620. So Globe breaking out of the 1,690 resistance. It's back to the 1,750 resistance. Expect a retest and a bounce, hopefully a breakout of 1,750, where the next resistance would probably be here at around the 100-day EMA 1,840. So let's see what happens. Globe declaring dividends. Ex-date August 18, 25 pesos per share. TEL nearing its resistance level here, almost hit the 1,336 resistance. So far looking on track to break the resistance level here at 1,336, but let's see what happens. Lastly, STI, is this the breakout that we were waiting for? So last week we mentioned waiting for a similar price action. The next few days will confirm, but I picked up some shares last week. Let's see what happens, right? So on to the global markets, the S&P 500 struggled with tariff uncertainties and rate cut probabilities, but overall, it was a solid week, though market sentiment was a bit choppy. Stocks swung between red and green sessions before ultimately ending just barely at a record close. This marked the first week under record high tariffs, but the market still seems unsure how to factor them in, other than assuming that higher is the way to go. The index actually dropped to the critical level at 6,200, but held on to the 20-day EMA this week. Now looking at the weekly charts, the US markets at this point looks quite overstretched. As you can see from historical price movements, the market is due for a reversion to the mean anytime soon. Now last week, President Trump announced CEA Chair Stephen Miran to the Federal Reserve Board to replace the outgoing Governor Adriana Kugler. Now, Miran served as an advisor of economic policy for the Treasury Department during Trump's first administration and is credited as being one of the authors of Trump's tariff policy and a key architect of his economic agenda. So as Trump continues to pressure the Fed into cutting rates, the market is already pricing in an 89.1% chance of a cut, a far cry actually from the 37.7% just last week. But ghost month jitters, remember it's August, ghost month jitters could soon haunt the markets as we look back at S&P 500 performance in August during the second term of post-election years. Historically, the average drop is 3.4%. The question now, how will Trump fare in 2025? Not only that, there's something about August that manages to shake the markets up and make all our lives more exciting. It was August when Iraq invaded Kuwait, Asian contagion, Russian default, European banking crisis, US debt downgrade, China yuan devaluation, and most recently in 2022, a very difficult year for the S&P 500. This was when Jay Powell made his surprise hawkish announcement at the Jackson Hole conference, despite expectations, right, to keep rates up to forcefully address inflation. Look at what happened after the announcement. The market had a massive drawdown, right? Now, the current S&P 500 situation also draws a lot of similarities with historical bull markets, which has often delivered strong gains. Look at the bull markets here, the 90s tech bubble here, 169%. They were followed by sharp declines, 58% even in the financial crisis. So this decline here is usually preceded with breadth narrowing before major downturns. So what happens is that if this goes down, meaning the percentage of stocks in the positive goes down, right? So the recent Magnificent Seven phase shows high valuations here with concentrated leadership, which means only a few stocks are pushing the markets up. See here, only a few stocks, only 25% of stocks pushing the markets up. Only 25% of stocks pushing the markets up. So this suggests that risks are now elevated if breadth here continues to remain weak. We are now at 35%. So we'll see what happens. With most of the cliffhanger uncertainties out of the way, congratulations to plus holders. Those who want to enter would probably want to wait for the Senate hearing, but at this point, reactions may already be muted because the president has all but said that banning online gambling is not in the cards. But, you know, there's other sectors that you can look at. REIT funds are currently being rewarded. Congratulations to us RCR holders. PhilREIT will be your next bet. 7% yield. That's actually a great yield. But for now, enjoy this calm while it lasts, because who knows what August has in store for us innocent investors. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.